Hey, I'm Sean Russell. I'm the Cowtown Banker. I've been talking through some different construction options. One of the things that I get asked for a lot on custom home builds is, and again, a custom home build being that plan is just for you. If a builder is building a house and he happens to be a custom builder, it'll have obviously a lot of custom features. We typically will call that a spec purchase. That type of purchase you can buy as is, like a normal loan, using conventional VA jumbo loan standards. It would look more like something that you might expect if you've ever gone through the process before. But those builders that have those specs, or custom builders, are not always keen on, and in fact, if it's a spec build, they will sell where they've already built the house. They're not going to let you add a pool or a shop. But I get asked about it all the time. I do a lot of loans out in Parker County, which is west of Fort Worth, Texas. I'm making this video, by the way, in February of 2025, and this information can change, but I would say that that is a very popular thing that people are wanting to add to their custom homes. More builders in Texas, at least, have gotten away from, as rates have gone up. They're less inclined to want to borrow that money to build your house even than they were before. So if you're buying a custom home or thinking about a custom home, you are going to have to carry the financing on that project. But one of the things I get asked about are pools and or shops. Again, let's say, pools right now are shockingly expensive if you haven't priced it before. My best advice is go find a house that already has a pool. I can help you with a renovation loan on the house and or pool. But if you're looking at a custom build, you can add it to your budget, okay? So one of the advantages of having that same custom builder build your own house is not only do you get to pick everything that goes into that house, very specific to you, but you can add a pool more easily, you can add a shop. So when you're looking at financing, one of the things I want to say is that if your most important goal is to get in up front to start construction with a minimum down, do not add a pool or a shop to that project. The reason why is because while I can add it, let's say that the house is $500,000, the land's $100,000, so you're at $600,000. You want to add a pool, you go price it out. Maybe you think you can do it for $75,000. It's possible, but it could be that expensive, I'll just warn you. Let's say you also want to build a shop, especially if you're out on some acreage. So another $25,000. So now we're at a $700,000 build, okay? What you're going to probably see, though, is the external features you add to a house, okay? Let's say it's an in-law suite, guest quarters, cabana. Again, it's not connected square footage, or it's a pool, or it's a shop. It is likely going to appraise for 50 cents on the dollar. So again, we were talking about a cost of $700,000. And what I'm telling you is I would expect that your best case scenario is that it appraises for $650,000. It's probably going to come in low. So while our bank might finance 95% of the construction project, it is still going to be based on either the lesser of the appraisal or the cost to build that house, including that pool and shop. So again, when someone comes to me and they got 20% down, they get a large down payment to make up front, and they want to do a pool, no problem. It's a very efficient way all around to be able to make that happen. Other people, when they're kind of tight because their equity is tied up in their home, then I advise them that let's go through the build before you move into the new house and you're finishing construction on the house. You've sold your other house, you use those funds to pay cash for the pool and the shop. Then I get an appraisal, a new appraisal at the end of construction that takes into account the entire valuation of the entire project, now with the pool and other things you might have upgraded. That way we can take into account and try to roll it and keep it all in one loan at a new value and take advantage of that equity. So again, there's kind of an overlap. There's some fluidity in how these construction loans work that can be nice and can help alleviate some stress. It's just a layered process. It's more like a chess game than a game of checkers, because you got to look several moves ahead. But ultimately, the important things are that you get to take advantage of the equity, that you're not having to get a second mortgage after construction, which is often the case. And that if you're going to roll it in, that you know what you're getting into. And I try to set your expectation that it is likely not going to appraise for what it's going to cost you to build it. So you need to be ready with more upfront cash if you decide you want to get that started right, or have that as part of the construction budget. And then secondly, to all of that, is that there's a number of ways that builders will do this. But the likely way custom builders, most of my custom builders have pool guys that they trust, because they're going to want to trust that pool builder. But that way they just build in a line item for the budget. That money just passes through their account straight to the pool person. They're not warranting the pool. They're not taking any skim off of it. But if they're okay doing it that way for a pool and or a shop or any other extra features, that will save you money and save you time. Okay. So again, I can talk you through some of the details, but again, the important thing is to know that you can add a pool. There's ways to buy a home and add a pool that we have. There's ways to, but again, the builder is not going to add that in and cover the cost of that. So you're going to need to know what your options are coming in. So if you want to buy a home, an existing home from either a builder or an older home and add a pool, there are ways to do it. And it's more efficient than going and getting a second lien later. But just be prepared for the upfront out-of-pocket expense potentially to make that all work. And the fact that the appraisal. Let's talk about the appraisal. The reason the appraisals typically come in low is because people with pools have a tendency to stay in their house twice as long as people that don't maybe add pools. So that goes from maybe a 7-year average for me to more like 12 to 15 years or more before they're selling that house. So in that case, when you get your appraisal on your house, again, let's use that $700,000 cost example. The appraiser has to go out and find existing houses, similar square footage like you'd expect. Now, because builders are not adding pools and selling houses with pools, like with new pools, the only pools that you see that are part of transactions that have sold are probably 10 years old, typically 5 to 10 years old in my experience. So what that means is the cost of that pool, the same size or bigger than what you might be building, probably cost half as much as today's pool cost. So that valuation, it only adds, it might add $50,000 to that other transaction. To the same size house, it adds $50,000 value. Well, those people are perfectly happy. That's basically what they paid for the pool. So just understand that it's because of data and the nature of the rules that govern the appraisal. It's not really bank to bank, but any bank you're working with that you're looking at financing a pool, it is something, if you're doing a custom build, a true custom build, one-time close or a two-time close, it's something that can be budgeted as part of the transaction. If you're buying an existing house, it gets a little trickier, but there are ways to manage to add a pool to that property. So if you're thinking about those things, let me talk you through how it's going to impact the loan before you go down and sit down and start negotiating and finalizing your numbers with your builder, or before you break ground, because you're going to need to make sure you understand the options if you want to have it included as part of your build. As always, pools just get more expensive, so time is always the enemy. Just let me know how I can help. My contact information, my direct contact information from me at my bank will be in the description below. Just pass this along to your family and friends that might be considering the same thing or anything related to construction. Please pass along my information. It is 90% of my business. It's not a niche on the side that I do. We do some VA construction loan or VA loans, construction loans, things like that. But a majority of my $30 to $50 million a year in closings are in the custom home construction world, right here in Dallas, Fort Worth, Parker County, Johnson County, Denton County. So I'd be glad to help you out. Thanks.